Hey, greetings, Keith Prather here with a farm equipment demand update for NCM. So this month we've tried something a little bit different, and we've incorporated a different element to the farm equipment demand index. And so what you'll notice is just kind of working with some of the instructors that we're going to break it down into two categories. I know there's a lot of complexity in what we're watching in the farm equipment sector, but we're trying to make it oversimplified, probably a little too much. But we're going to categorize it as farm tractors and equipment and sort of above the 100 horsepower category, and then those under the 100 horsepower category. And kind of give us a little bit of an idea of how the different segments are working. And after looking at the data this month, I completely understand it and completely appreciate it because they're moving very differently. So a lot of different triggers that kind of affect both. And so we'll talk about that for a moment. So currently the farm equipment demand index for tractors over 100 horsepower and then the implements and the equipment to go along with that, we still see it downtrodden, right? There's no surprise here. It should be no shock to anybody. Maybe what we do say is that the October reading of 60.7 was maybe a little bit stronger than expected. September it came in at 60.9. Again, in this category, you do see a lot of farmers kind of running between two different markets. They're working in the row crop industry, but they're also transitioning over and they have a ranching component. And the ranching component, especially anyone in beef and beef sales, and beef production, obviously doing very well. They've got a lot of disposable income, and some of them, if they're just singularly doing cattle ranching, they've got a lot of disposable income to go out and spend on new equipment. Those who are doing both row crops and ranching, which there's a lot of big percentage of farms doing that. Some of the ranch profits are helping offset some of the losses on the row crop side. So we don't necessarily see that freed up income to go out and make purchases overall. But we're hoping that maybe there's some mechanisms in place. We'll see what happens. I'm going to talk about the farm sentiment index here in a moment, and we see just a little bit of improvement after the China meeting. The one thing I will caution everyone on, however, is that China meeting is just a handshake. The only threat and the only binding part of that agreement whatsoever is the threat of tariffs. So if China doesn't uphold its end of the bargain and make soybean purchases and pork purchases like they have promised, then there's really no binding legal agreement that forces them to do that. So the relations between the two countries are going to be very critical, and we need to see them follow through on making some of the 15 million metric tons of soybean purchases they'd promised between now and the end of the year, and then follow that up with a little over 25 million next year. And if they do that, then you kind of get back into an environment that we had. You'd have to go back to probably 2015, 2016 to maybe find a similar environment. We got a little bit of that coming out of the pandemic, but there was a lot of obviously pandemic noise kind of buried down in the middle of it. So, but 25 million metric tons is the same amount that they used to buy from the United States, kind of back when the trade conditions were normalized between the two countries. So it's interesting, a lot going on here. Let me move over to this. So the industrial production number, as you can see, a lot of equipment dealers just kind of keeping production flat. And unfortunately, we can't split this one out between, greater than 100 horsepower and under 100 horsepower. I can tell you that production in the smaller, hobby farm, tractors is going to be a little bit hotter, obviously, than what we see in the larger farm production, horsepower range tractors and the equipment, but it's not dramatically different at the moment. There's a lot of inventory that we're still feeding off of, and we're still absorbing that inventory, and so it's going to take a while for even the lower size segments to kind of build some momentum. So a couple more things here. So in the under 100 horsepower segment, you can see the demand is a little bit better. We've had just a little bit lower activity month over month. I will tell you this, this is the first month that we built the index. We've gone back and we kind of tested it over the years. But in the basically 11 years of data that we've got access to, it seems to fit some of the traditional waves. I have a feeling you'll see adjustments to it as we move forward and we get a little smarter on it. I think you'll see the demand index change a little bit, but at least we know what major factors are driving demand in this sector. So forget the lower month over month number. I think the more stable number is it's about 3.8% higher year over year. that seems to corroborate with a little bit of what we're seeing in some of the sales data for tractors in this category, some segments specifically. I know, again, when you think about some of the skid steers and some of the smaller equipment that really works on a ranch as well as on a small hobby farm, demand for those products is a little bit higher than obviously what we see in some of the other categories. And I'll just speak from my own experience, but just in my area, the Midwest alone, there's a bunch of us that have decided to go out and purchase small acreages. So 10 to 20 acres are kind of the average. And a whole bunch of us, first timers moving out of the city and moving out on these acreages. And every one of us is out trying to figure out what brand or what color we want to go with to be able to get a tractor with a bucket on the front and the right kind of implements on the back to do the mild work that we need to do. But I know that just in talking to the dealers around us, they have seen some improvement in some of that demand. It's sporadic, right? So we'll see a couple of months where you see a surge in the activity, and then we go a couple of months where it's actually downtrodden. But a lot of it ties to what happens in the rural residential building activity, and we can see some ties there. So we've got pretty good overall income. We see some ties between this number and what happens in the stock market. I know that sounds a little crazy, but the incomes for households that have the wherewithal to move out onto a smaller property, build a brand new home, whether it's a barn dominium or whether it's a custom home, and then make these kinds of equipment purchases are largely being driven by their overall net wealth, and that net wealth gets driven heavily by the stock market. And if they feel like their investments and that their net wealth is growing, then they'll go free up cash or they'll go borrow and they'll make purchases, knowing that overall, their stock market growth is, 10, 15, 20%, and they're borrowing money at 5. And so that's kind of what's driving a lot of spending. And as we lower interest rates, I will say this also, as we move forward and we learn more about the segment, there is a direct correlation between sales in this segment and what happens in interest rates. We don't see as much sensitivity in large commercial farms. So we think about tractors over 100 horsepower. There is the interest rate sensitivity, but there's other factors that also make a big difference in whether farmers are going out and investing in, massive equipment, new combines, all the different equipment that comes along with, major row crop harvesting. And they are focused and they're sensitive to interest rates, but they're more focused on the age of their equipment, what they're getting for commodity prices, what their yields look like, and some other factors as well. In this category, interest rates make a direct difference. There are a lot of hobby farmers out there that are using older equipment, and a right combination of them hitting a dealership floor at the right time, good interest rates, and maybe a good discount offer, and they're walking away with a new tractor. There are other factors that are less important to them that would drive purchase decisions. So what we've seen historically is that if we see another 50 basis points in cuts, so if the Federal Reserve follows through and they trim another quarter point between now and the end of the year, and then what they're projecting is another quarter point in Q1, then you're going to get the extra 50 basis points. And historically, then that threshold, that level of interest rate has driven sales and it's created a stimulus in the under 100 horsepower category of buyer. So just watch for that trigger. It gives us something to watch and something to focus on. Wages and some of the other things that drive other types of consumer spending are going to be more a factor in this category as well. So job stability, what you see with overall household income and growth there, tax cuts and some tax stimulus will help this category. And so off we go. Okay, Farm Capital Investment Index. Again, this is going to be primarily for large commercial farmers, but we just got the Purdue data out today, actually, at the time of recording. And the composite index remained stable at about 129 points. It was up 1 point from last month. Little mild optimism about the China deal. They're really hoping that China follows through this time. And the thought and the thinking there for most analysts like myself is that China's in a lot of trouble. Their economy is really hiccuping right now. They need a lot of help. And the deal, the way it was structured, saves them. It saves a lot of face for them, especially for President Xi. And the purchases of soybeans, they need them anyway. And this opens the door and creates the catalyst to let them make those purchases, probably at a pretty decent discount. And it kind of gets both economies stimulated a little bit, and we desperately need it in the farming community. Capital investment expectations did jumped about 9 points in the October reading to 62, and you can look and see where that is. We're finally at levels that we saw, back during the pandemic. And so, we can argue that it's almost the strongest levels we've seen in almost 5 years. Back also to kind of where we were prior to the pandemic. So this is a good, hopeful sign. And I think maybe the farm economy and the farm sector is now finally turning a little bit of a corner. Well, let's hope. So tractors over 100 horsepower. So sales for high horsepower tractors, we know dropped sharply in 2025, down almost 25% from where we were last year, based on some of the data that I have access to. Um, just a lot of economic pressures on large commercial farms right now. Inventory for a lot of for used high horsepower tractors continues to go up, and so see auction prices falling as a result. And a lot of analysts are really looking at early 2026, and they're saying that maybe the recovery doesn't come fast enough, and so excuse me, auction values could decline another 15 to 25%, but we'll see what happens. A lot of catalysts in here that could change that. So significant turnaround in U.S. exports, a better farm bill, a lot of farm stimulus. A lot of those things are still kind of in the discussion stage and in the works, and a lot of that would change the trajectory overall. New equipment market right now just remains challenging. Higher input costs, still declining commodity prices. We don't see that rebound yet. A lot of farm margins are going to be tighter, and just a lot of cautious capital expenditures for those large operations. I mean, interest rates are still too high. Again, if we get a little bit of relief on the interest rate level front and get a little bit of stimulus and a little bit of bailout money, and maybe you see some help. But longer term, the good news is that we see an annual growth rate of around 5 to 7% through 2030. So they do believe that a couple of years of pullback in spending kind of compounds, and we see a lot of farmers move in to start replacing equipment as soon as the market turns and becomes favorable. And we think that'll happen kind of toward the latter end, obviously, of this decade. So at least there is some hope out there for that. Under 100 horsepower, then. Compact and utility tractor segments, mixed signals. So subcompact right now still down about 1%. Utility tractors, down about 2.1% year over year. Mid-range utility tractors, though, did see some nice rebound in Q3, and a lot of that tied to what's happening in the cattle market. A lot of hay, a lot of people trying to get into the hay industry, and just a lot of livestock farm purchases in those categories. High interest rates right now really pressuring hobby farmers, but again, it works the other way as well. So once we get those 50 basis points in cuts, that pulls some of the buyers who've been sitting on the sidelines in this category back into the market. And then again, couple that with some discounts and or maybe some package deals at the dealer level, and I think you're going to start seeing more foot traffic. Used values for these sizes are still holding their value pretty good, still dropping a little bit, but not anything like we see in the higher horsepower categories. Inventories are still decreasing a little bit, so we see a lot more turnover rates. Analysts expect again this whole group to remain relatively stable, and we think that there are some trends, some consumer trends of people being interested in going out and doing these small lifestyle type farms where it's a little bit of hobby, it's a little bit of retirement, but it's all new for a lot of these households are going to be headed that way. And if you've watched some of the RV video recordings that we've done and some of the others, you'll also know that between now and 2030, again, a little over $12 trillion is going to change hands. And there's a younger generation coming up that's going to figure out what they want to do, and whether they stay on the family farm and continue to farm it like grandpa and like dad did, or whether they can do something different. So we could have some net loss there. But likewise, you're going to have some people like myself who've been living in the city who suddenly, have the wherewithal to go out and get a little bit of acreage. And we don't know what we don't know. And so we go out and we make a lot of purchases of farm equipment, and some of it'll be right, some of it'll be wrong. Everything that I've been told from a lot of local farmers is, take the horsepower you think you need and then up it a little bit, and that's where you should buy. So we'll see what happens. But anyway, I think it's interesting because I think the market could be full of guys out there like me who are going to get dangerous and probably hurt themselves at some point. So anyway, well, that's what we had for you this first round. Again, I think once we get government data in by the end of the month and get beyond the holidays, some of these perspectives will change. We're going to learn more about that under 100 horsepower category. We're going to be able to provide you with more insights as we come over the next couple of months. But this is our first foray into that for this time around. Hopefully it was useful. Hope everyone stays safe and has a very healthy holiday, and we'll see you on the other side. All right. Take care.